Buying a car should be exciting, but for most people, it turns into a nightmare of hidden fees, pushy sales, and overpriced deals. I know this pain firsthand. A few years ago, I walked into a dealership thinking that I was getting a great deal, only to realize later that I overpaid by thousands. And I'm not alone. Every single day, people walk into dealerships thinking that they're getting a bargain, but in reality, they're getting ripped off. But once I learned how dealerships actually make their money, this changed everything. Since then, I helped myself, my friends, and my family save thousands on their cars, whether it's a budget-friendly ride or a luxury vehicle. And in this video, I'm gonna show you exactly how to do it. Because if you don't know these car buying tricks, you will overpay, just like millions of others who fall into the dealership's trap every year. Here's what you're gonna learn. First, you're gonna learn about how dealerships actually make their money and how to use that to your advantage. Next is a step-by-step negotiation strategy that gets you the best price possible. And lastly, how to handle financing, trade-ins, and dealership upsells without getting ripped off. By the end of this video, you have everything that you need to walk into a dealership with the confidence to leave with the best deal possible. Buying a car isn't just about negotiating. It's about knowing the numbers before you ever step into a dealership. Most people assume that dealerships make their money on the sale of the price of the car, and that's not where the real profit is. The big money comes from financing, warranties, and add-ons. That's why the sticker price is inflated. It's a way to make you feel like you're getting a deal when you start knocking money off. If you want the lowest price, you need to reverse engineer the deal. The first step is to find out what the dealer's real cost is. The price of the window sticker isn't what the dealership paid. Before negotiating, you need to know 3 key numbers. First is the invoice price. This is what the dealership actually paid the manufacturer. You can get a rough estimate from websites like Edmunds, TrueCar, or Kelley Blue Book, but the only way to know the exact number is from the sales manager. Some dealerships share it, but most don't. Even an estimate gives you negotiating power. Second is market value. This tells you what similar cars are selling for in your area. For newer cars, check Edmunds or TrueCar. For used cars, check Car Gurus, Auto Trader, or Craigslist. Third is how long the car has been sitting on the lot. The longer the car sits, the more desperate the dealer is to sell. Car Gurus will give you a rough idea of how long a car has been there. If it's been on the lot for 60 to 90 days, this dealership is more likely to negotiate. Here's an example. Let's say that you're looking for a 2025 Cadillac with a sticker price of $41,600. You check the invoice price and you see the dealer paid $39,300. Market value shows similar cars selling for around $38,000 to $39,000. You also check Car Gurus and you see that this car has been sitting for 90 days. That tells you there that there is at least $3,000 in wiggle room and the dealership is motivated to sell. Now, before you step foot into a dealership, you should already have financing lined up. I will go over financing in more detail later, but the most important thing that you need to know is that getting a pre-approval gives you leverage and helps you avoid a bad loan offer. You also want to time your pre-approval carefully. Once you start applying for auto loans, aim to buy within a 30-day window. During that time, you can shop for the best rates without hurting your credit score. Even if multiple lenders check your credit, all auto loans inquiries within a 30-day period count as one single hard inquiry. Check with credit unions, online lenders, and banks before you walk into your dealership. At some point, the salesman is going to ask about your financing. The best response is simple. I'm pre-approved, but I'm open to options. Right now, I just want to focus on the price. This keeps them from using financing tricks to sneak in extra costs. If you plan to pay cash, don't mention it upfront. A cash buyer isn't worth much to a dealership because they make most of their profit from the financing. If they know that you're paying cash, they will be less willing to negotiate. A smarter move is to finance through the dealership. If the rate is competitive, then pay it off early to minimize interest. This can help you get a deeper discount. Next, if you're trading in a car, this should be a key part of your research before ever stepping foot into a dealership. Trade-ins is another way dealerships make money. If they can lowball your trade-in value, they can make it look like they're giving you a discount on a new car, when in reality, they're just shifting the numbers in their favor. If you don't know what your car is worth before trading it in, you're leaving a lot of money on the table. And that's exactly what the dealership wants. Before negotiating, check multiple sources to get an accurate estimate of your trade-in value. One way is the Kelley Blue Book, which is KBB. This is a decent starting point, but often inflated compared to actual trade-in values. KBB is more useful for private sales. Another way is getting Black Book and MMR value. These are real auction data sources that dealerships use, but they aren't publicly available unless you have dealer access. And lastly, you can check with Carvana or CarMax. Both offer real cash offers instantly. Many dealerships will match or beat these offers to earn your trade-in business. You want to have multiple offers before you walk in. If a dealership tries to lowball you, then you can just push back with real numbers. Your trade-in should always be handled as a separate transaction. If you mention it too early, the dealer will try to bundle it into the deal and manipulate the numbers. Again, focus on negotiating the out-the-door price of the car first. Once you lock in the lowest price, then bring up the trade-in. That forces them to give you a real trade-in value instead of just playing with the numbers. If you are considering buying a used car, you can get a rough idea of how much a dealership marked it up with a simple trick. Call the dealership and tell them that you have the same make and model and year with similar mileage, and ask them what would they offer you if you were to sell it outright. They probably give you a lowball offer, and that's pretty close to what they actually paid for the car that you're looking at. For example, if you're looking for a 2021 Honda Accord listed at $26,000, you call the dealership and ask what they paid for a similar Accord with the same mileage. They say $20,000. That tells you that they have at least $6,000 baked into the price. Now you know exactly how much room there is to negotiate. Once you've done your research, now it's time to put into action. Negotiation is where most people struggle. It can feel intimidating, especially when you're up against salespeople who do this every day. Walking into the dealership unprepared is one of the biggest mistakes that you can make. Dealerships train their employees to keep you focused on the wrong numbers so they can squeeze more money out of you. But that's not gonna happen to you because you're gonna control the conversation from the very start. The first step is to start negotiating online or over the phone. This saves time and gives you leverage. You never want to start negotiating in person. The moment that you sit down at their desk, you already are on their home turf and they have the advantage. Instead, start the process by email, phone, or online chat. Contact multiple dealerships and ask for their best out the door price, including taxes and fees. If a dealer refuses to give you a price upfront, they're just trying to get you inside so they can pressure you. Either just ask a different salesperson or just move on. Once you get a quote, take it to another dealer and say, hey, I got another dealer offering me $35,500 out the door. Can you beat it? Keep playing dealerships against each other until you reach the lowest price. This method works well because you're not emotionally invested. It's easier to walk away when you're negotiating from home. You also make dealerships fight for your business instead of the other way around. Next is that you avoid in-person sales pressure, where they try to wear you down by keeping you there for hours. Once you locked in the best price online or over the phone, then you could go finalize the deal. Step 2 is to control the conversation from the start. When you reach out to the dealership, you want to control the conversation right away. Here's a simple message that works. Hi, I'm interested in vehicle model, stock number. Can you send me the out the door price, including all the taxes and fees based on the zip code? Before giving you the price, you'll try to shift the conversation with questions like, what monthly payment are you looking for? Do you have a trade-in? Or how much are you planning on putting down? These questions aren't meant to help you, even if they sound genuine. They're designed to manipulate the numbers to make a bad deal look good. If they try to steer the conversation, just bring it back to the price. Right now, I'm just collecting out the door quotes for multiple dealerships. I'm making a decision based on the best offer. This keeps the focus on the total price and not the monthly payment. Second, in fact that they're shopping around, they know that they're gonna have competition. And third, pressuring them to give you a competitive number upfront. Now, if you're living in a smaller town, or if you're buying a high demand car with fewer competing dealerships, you may not have as much leverage. In this case, you need to leverage your market research. You wanna use invoice pricing and similar listings as comps to negotiate. Next is that you wanna consider expanding your search radius. Sometimes driving an extra 100 to 200 miles can save you thousands. And third is to be prepared to negotiate harder in person. Some smaller dealerships are less willing to give you aggressive prices upfront. Out of all of the times I ever negotiated in person, my best piece of advice is to control the conversation. Remember, still be polite and respectable. The only way to know if you're getting the best deal is to get comps from multiple dealerships or based on your research. Step 3 is to start with a low but reasonable offer. Once you've gathered out the door pricing from multiple dealerships and there's no more competition to drive the price lower, it's time to negotiate directly. Most buyers, they start too high, working down from the dealer's asking price. But the right way to negotiate is to start low and force the dealer to work up. This is called price anchoring, and it gives you control. Let's say that the dealership offers you a car for $36,000. Your research showed that the invoice price is around $33,500. The car has been on the lot for over 60 days, meaning that they are more motivated to sell. Other buyers have been getting deals closer to $3,200. Instead of working down from their price, you start from your number. Something aggressive, but within reason, like $31,000. They won't agree immediately, but now you set the negotiation in your favor. They'll most likely counter higher, but now they're working from your number and not theirs. It also gives you room to cut out unnecessary add-ons and fees. Most dealerships inflate the price with junk fees that should be removed. Here's what to look out for. Dealer prep fees. This is just a way to charge you what they're supposed to do anyways. VIN etching. This is a scam. Most cars already have this. Paint protection and fabric guard. This is overpriced and unnecessary. Advertising fees. That's the dealer's cost and not yours. And nitrogen tires. This is a gimmick to charge you more for regular air. If they refuse to remove the fee, counter by lowering the car price by the same amount. For example, if they won't take off the $500 dealer prep fee, just say, okay, if that fee is mandatory, let's just take $500 off the sale price instead. Once you've gone through a few rounds of negotiation, first with the salesperson, then the sales manager, and the numbers still aren't where they need to be, the most powerful thing that you can do is to walk away. A simple way to do this is just say, I really appreciate your time, but this isn't where I need to be. Stand up, shake their hand, and just walk towards the door. If they don't stop you, keep walking. There's always going to be other dealerships and other options. The last time I bought a car, I took an Uber to the dealership because I fully expected to drive the car home. I already agreed the price over the phone, but when I got there, they tried to change change up the numbers. This is what really annoyed me. I pushed back, I went through a few rounds of negotiation, but they still wouldn't budge, so I stood up and walked out. As I was leaving, the salesperson did chase after me and slightly give me a better discount, but still not what I wanted. She didn't try to pull the FOMO tactic, saying that this deal won't be here tomorrow. I confidently said no. A minute later, as my Uber was about to pull up, the sales manager ran outside and he said, "Are you really gonna walk away from this deal over a couple $100?" I smiled and said, "Yeah." He sighed and said, "All right, let's just get this deal done." Just like that, I got the price that I wanted. Was I being petty? Hell yeah. The deal was pretty good previously, but I knew the comps and what I could get. That kept me confident to turn the deal away. At this point, you negotiate the lowest possible out the door price, but the dealership isn't done with you yet. This is where they make the real money, through financing, extended warranties, and unnecessary add-ons. If you're not careful, a great deal can turn into a bad one the moment that you step into the finance office. Here's exactly how to avoid overpaying. As mentioned before, you need to get pre-approved for financing before car shopping. This does two things. One, it prevents the dealer from marking up your interest rate. They can't trick you into an expensive loan. Second is that it gives you leverage. If they want to give you business, they would have to beat your pre-approval rate. Here are the best places to get pre-approved in this order. First is credit unions. Usually they offer the best rates. Think about like Navy Fed, Penn Fed, and DCU. Second is online lenders such as Capital One, Livestream, and similar options. And third is your own personal bank. If you have a strong relationship with them, it may be easier to get approved. Now, credit scores are a little bit different with auto loans. Your FICO auto score, not what you see on Credit Karma, is what lenders actually see. You most likely qualify for the best rates if your credit score is above 760, but many lenders will give you the best rates if your score is above 720. If your score is below 720, here are a few ways to boost it fast. The first way is to pay down your credit card balances. Lower utilization increases your score. Second is to remove negative items. If possible, dispute or settle them. As a shameless plug, I do have a software that can help you with this. You can learn more down below or scan this QR code. When shopping for auto loans, all inquiries within 30 days will count as one hard inquiry. So don't be afraid to compare rates. The next step is to don't reveal your pre-approval rate right away. During negotiations, the salesperson will ask, "Are you financing with us or paying cash? Or do you have a pre-approval already?" Your answer should be, "I'm open to financing, but right now I'm just focused on out the door pricing." If they think that you're gonna be financing with them, they are more likely to lower the car price because they expect to make money off the loan. Once the price is locked in, then you compare your pre-approval rate with theirs. If they can beat your rate, great. If not, you just stick with your pre-approval. The next step is to ask for the buy rate. If you do consider dealership financing, always ask for the buy rate, the actual rate that the bank offers them. Most people don't realize that this even exists. So here's how it works. The lender might approve you for a 4% interest, but the dealership marks it up to 6% and pockets the difference. Even if they do match your pre-approval offer, there's a chance that they even got a lower rate from the bank. If they match your pre-approval offer, push further and ask, what's the buy rate on this loan? If the dealership buy rate is lower than your pre-approval, then this is up for negotiation. The next step is to try to avoid long-term loans. Dealerships, they love stretching your loan term to lower your monthly payment. It sounds good, but it costs you way more in the long run. For example, a $30,000 loan at 6% over 5 years is gonna be around $34,800. Over 84 months, it's gonna be closer to $37,857. That's a $3,000 difference just because of a longer term. Try to stick to 60 months or less whenever possible. Step 5 is to watch out for prepayment penalties. Before signing, ask, is there any prepayment penalty on this loan? Some lenders charge a fee if you pay off the loan early. This is critical if you plan to pay off your car fast or want to refinance later. If there is a prepayment penalty, walk away and just use your pre-approval instead. Step 6 is to avoid overpaying for add-ons. Once you're in the finance and insurance office, expect them to push extended warranties, gap insurance, paint and fabric protection, and rust proofing and undercoating. Dealerships, they mark this up by 200 to 300%. Instead, if you want gap insurance, get it through your lender for a fraction of the price. And if you want extended warranties, shop around with third-party providers. You don't have to buy them on the spot. When you start pitching add-ons, firmly say no to everything up front. You can always buy them later if you really need them. At this point, you locked in the lowest price, secure the best financing, and avoided unnecessary fees. Now the only thing left is finalizing the paperwork. Just review everything carefully before signing. And if anything looks off, question it. If the numbers don't match what was agreed upon, be ready to walk away. This is the final step of taking control of the car buying process, and make sure that you drive away with the best possible deal. As a bonus, here's another best practice when car buying. Even when you follow every negotiation tip in this video, timing your purchase correctly can save you more money. Here are the best times to buy a car. First is weekdays. Avoid shopping on weekends because dealerships are busier and salespeople don't need to work as hard to close deals since there is a steady flow of customers. On weekdays, especially early in the week, dealerships are slower and salespeople are more motivated to cut a deal. The next time is towards the end of the month. Salespeople have quotas, and most dealerships operate on monthly sales goals. If a salesperson is short on their goal, they may take a lower offer just to hit their numbers. The next time is at the end of the quarter. Quarterly sales goals work the same way, but on a larger scale. This means March, June, September, and December tend to be a great time to negotiate a deal. And the best time is at the end of the year. If you're not in the rush, consider waiting until December so you can save thousands. Dealerships, they want to clear out old inventory before new models arrive, and sales managers are desperate to hit yearly quotas and will take aggressive deals. The week between Christmas and New Year's is often the best time to buy a car. Now that you understand how to get the best price at a dealership, you are now ready to go out there and negotiate with confidence. And if you're financing your car, don't forget to check out this video next. I'll show you exactly how to pay off your auto loan in half the time, saving you thousands in interest. See you in the next one.